Oh, hey there, everybody. John Bryn here, back to talk to you about some of the trending articles in the crypto news space for good old crypto top 10. Bleh. Oh man, hope you got a big old cup of coffee. I currently do, because it is much needed. And I gotta say, we've got a really interesting episode of news to get into. So, first off, thanks to everyone who's subscribed. Really do appreciate it. And there's a link or links down in the description, depending on where you're finding this, so you can check out all these articles for yourself. And I highly advise you do, because boy, is there some interesting stuff today. We'll start off with kind of the easiest one of the bunch. So FILECOIN. They recently had what they called a space race, where they were, I believe it was 4 million FILECOIN they were putting up for miners, so that way they could test the network and try to add stuff to it. It's called FILECOIN because you can create storage on the blockchain. Kind of nice idea, a little bit more unique in the space, so I like it. However, they just explained in a post that it's decided to conduct space race number 2. So they're doing a phase 2 of it after the large participation of miners in the first space race, who numbered more than 356 from 32 different countries. And the results from its first iteration. So they're going to be running this starting today, actually. So, hey, good for them. Through the beginning of October. I'm assuming it's going to be done in the same way that the first one was, in which they'll hold a competition to see who can add the most storage through mining to the FILECOIN blockchain system and reward proportionally based on that. Last time they gave away 4 million FILECOIN. I wasn't able to find how much they're planning on giving away this time. But I'm assuming it's about the same. According to FILECOIN, the experiment's going to consist of 2 different tracks that will ensure that different network parts are practiced and tested by the community members. Storage miners will continue testing and growing the network scale. And the other half of it is going to be for FILECOIN clients and application and tool developers to make storage and retrieval deals so they can prepare for the mainnet. So basically, they're testing out what I consider to be the 2 main points of the FILECOIN system. The firm says there are 2 objectives for this. They want to create a suitable economic simulation through which the impact of factors such as block rewards and gas fees can be studied. And then the second is to simulate markets, especially with the imminent, they said that, imminent transition to mainnet. So they need a robust global and decentralized storage network for human information. Good on you, mate, though I do got to add, it is on track to launch its mainnet, but they said that back in June, and they were hoping to release it during the summer, of which we, in my opinion, are now past. It's fall now, y'all. It just is. Despite on whether or not it's technically legally fall because of the 21st day of the month is. I don't pay that much attention. All I know is it's September. There are pumpkin spice lattes. It's fall. So, without further ado, let's hop on over, touch on Tezos a little bit. It has been caught up and consolidating for the past week against the US dollar trading pair. It's been unable to garner any really independent momentum one way or another. I know it got up pretty high there for a moment, but it dipped back down, and its price has been trading between 235 and 265. We're somewhere in that channel right now, I believe. Bulls are attempting to break the range and catalyze further in the near term, but whether or not it can push higher is probably going to depend on how the rest of the market's looking. And the rest of the market is kind of meh. I looked at it. The worst coin in the top 100 is only down by 11%. So not like a bad day, but most coins are in the red a little bit, with the exception of a few notable ones, which we're going to get into here in just a little bit. But Tezos is technically up at its 260 mark, at least at the time this article was written. I would consider it to be pretty flat at this point. But it is trying to break out of this consolidation phase, but it's hitting some resistance at the upper boundary. If it can be broken pretty decisively, it should be able to surge higher, but we don't know. The rest of the market is just kind of weak, and Tezos is kind of struggling to break out from the pack on that. An analyst did note that while looking at Tezos' Bitcoin trading pair, It's currently sitting at the lower boundary of a long-held range. So despite that support, he notes that he is hesitant to flip long and that a break below this level could lead to a significant decline down to lows not seen since early 2020. So Tezos, we're stuck in this weird wait-and-see mode where it's still technically, according to the technical analysts, is hitting the main points to be looking like it could have an upside, but we're not sure. I think long-term Tezos will be a decent investment. For those of you who are more interested in the short to mid-term, it's kind of a wait-and-see type thing. But all right, let's hop over to article number 3. I just had to include this because what in the world? Sushi Swap continues to astound me with its weirdness. So Sushi Swap creator Chef Nomi announced today, and by today they mean September the 12th because I was off over the weekend, he's going to be returning the funds he cashed out with. So most of DeFi Twitter and most regular people are just confused and they're struggling to keep up. For those of you living under a rock or just not aware what Sushi Swap is, because why would you be? It's not even a month old yet. It is a clone of Uniswap, but it has a new token called Sushi, which rewards liquidity providers and token holders, whereas Uniswap doesn't have that. It's migrated over to its formal protocol, and things were going well for the whole week until the DEX's pseudonymous creator Chef Nomi withdrew. It was called 12 million at the time. I think it's now Sushi's now currently worth the amount he withdrew is now currently worth 14 mil. And he was accused of orchestrating an exit scam. Yesterday, he publicly apologized and actually returned the funds. Prior to this, he had denied it, passed the buck to the community, and then handed off control of the network to Sam Bankman-Fried, the CEO of the FTX exchange, for him to shepherd to a decentralized government. And as part of this, he's letting the community decide how much to pay him for creating the protocol. So basically, when he was doing this, he was like, well, there was $27 million in a dev fund. And basically, he was saying, well, I'm the developer of this, so that 12 million is mine as part of the dev pool. I don't 100% disagree with that. Just that he did it in an awful way. If he had started the protocol with him holding X amount of Sushi tokens, if anyone had criticized him then, he could have said, yeah, I believed in the protocol, so I put my own, I'm invested in it because I'm the creator, and I think that would have hammered out most criticisms then. But he didn't do that. Instead, he pulled it from what he had called developer funds for the future of the protocol. So a lot of people reacted to it. There's some pretty interesting tweets going on out there. If you want to check this article, pop down to the description. There's some fun ones. I kind of laughed. He stayed pretty quiet. Good old Chef Nomi. He tweeted as part of his apology, I will continue to participate in the discussion and technical implementation of Sushi Swap in the background, but I will not have any control. I will not take any spotlight, and I will not be part of the governance. Yeah, I do like Alex's, though, one tweet I'll read. A Sushi Swap, he sends back the funds. What in freaking hell is this timeline? It truly is the darkest/dankest timeline. # community. 6 seasons and movie. All right, let's hop on over. Tron. This one was not a crazy announcement, but it's still pretty interesting if you ask me. According to a press release, the digital asset contract exchange platform BW.com, together with the Tron protocol, is going to be launching an IEO, or an initial exchange offer, on September the 15th. The BW.com token will be used to pay for the services of the first public Oracle system on the Tron network, and that's where it gets interesting. Not Chainlink, not Band, a new one. Getting a new Oracle service. I'm liking it. There needs to be more competition. Oracles are going to be a big part of the DeFi space and the crypto space as a whole. It's going to be called a BRG token. It will function as a link between smart contracts on Tron with data acquired from the real world in a secure, decentralized, and reliable way by the Bridge Oracle service. So For those of you who don't know what an oracle is, it takes outside data and puts it into the blockchain so that way it can make its adjustments to its smart contracts based on those details, but it pulls the information in a safe and secure way that doesn't compromise the coin itself. Following the token distribution policy set out in the Bridge Oracle's white paper, the IEO will put 20% of the total supply of the BRG token for purchase of any investor globally, as mentioned above. The sale is going to start on the platform bw.com. It's going to be running until September the 16th, so I believe it's started. Each token is going to cost 0.4 cents on the USDT or Tether / BRG trading pair, with a minimum purchase of 10 Tether and a maximum purchase of 200 Tether. Along with the trading pair, BR.com will enable the BRG / Bitcoin trading pair. The platform will make future announcements to inform investors of deposits and withdrawal times, and they split it up pretty well. Bridge Oracle and Bridge.link, they've got 20% reserved, 15% for a private sale, 20% for the public sale, and the remainder is being split up between the team, operations, development, marketing, and auditing. So the standard stuff. Fairly decent distribution if you ask me. They are keeping 10, 20, 30, 40, 45% in reserve for themselves to run the business. The staking pool will probably be there long term once costs have stabilized, with 35% being up for sale to the public. Not a bad distribution if you ask me for a start. It will definitely, more and more funds will trickle to the community as the development, operations, and the team spends the money acquired. So let's hop on over then. We got to talk about Polkadot and BNB really quick. So they are now the 5th and 6th largest coins by market cap respectively, taking out Chainlink and Bitcoin Cash. Bitcoin SV has been long out of the top 5. Good. Anyways, the flip, which took place overnight, is because Binance Coin increased by 15%, up to $31. Woo. They just launched their Binance Smart Chain. It's actually taking up like over 10% of the traffic on Ethereum. Never bet against Binance. DOT increased by 14%, so both had roughly 15% increases to 522. Chainlink and Bitcoin Cash did go up, but not by much. So they are now 5th and 6th coins by market cap. For those of you living under a rock, market cap is calculated by multiplying the price of a coin by its supply. That being said, all of the coins are rather close. Binance Coin is at 4.4 billion, Polkadot's at 4.4 billion, Chainlink's at 4.4 billion, Bitcoin Cash is at 4.2 billion. It's just those other smaller numbers, once you get past that 4.4, are just a little bit different. So we're going to be seeing some fluctuations here. Though the top 4, Bitcoin, Ethereum, Tether, and XRP, are still way ahead. XRP is in 4th place at $11.1 billion. So they are still by and far the leader of the pack. That separates the top 5 from the top 4, which the top 4 do not have a lot of movement, but everything below that point kind of shuffles around, with the entire cryptocurrency's market cap being $345 billion. Anyone remember in 2017 when it was like $800 billion and we were talking about hitting that $1 trillion mark? Miss them times. But hey, that does it for pretty much most of the crazy stuff, though I got a couple more coming up, so let's hop on over and talk about the next thing. All right, so let's hop on over, talk about China's digital currency. Oh yeah. So China's central bank digital currency, what I will call hereafter as a CBDC, known as the digital Yuan, should be regulated in line with cash-related laws, according to a senior exec at the country's central bank. I agree with him. In short, I agree with him. It is an opinion, though. He published an article on September 14th. Fan Yifi, the deputy governor of the People's Bank of China, outlined the major regulatory principles for this. According to Fan, the digital renminbi, little side note for those of you who don't know, The renminbi is the official name of the Chinese currency, with the yuan being a unit. So it would be like if everyone called the US dollar pennies. The name is still the dollar, but the smallest unit of that is the penny. Kind of an interesting way of doing it. Or if our $1 bill had a different name, if it was a 1 Washington or a 1 buck. There we go. There we go. A unit is a buck. The name of the currency is a dollar. So that's where the renminbi name comes from, for those of you who don't know. He's saying the digital renminbi is legally compensatory to the traditional fiat currency. And he outlined that this digital RMB is mainly positioned as an M0, which means that it's part of the supply of paper notes and coins. They're going to peg it to their traditional yuans, so I fully get that. It makes no sense to split it up, and if you're not going to split it up, then it should be treated just like traditional cash or fiat. It is definitely not decentralized, but it does take some blockchain principles, and it is a really interesting step forward that Bitcoin and the rest of the cryptocurrency market has helped usher in. That's why we talk about it. So he went on to say that according to renminbi's indemnity provisions, the digital RMB could be used to pay all public and private debts within the territory of our country. That's exactly what the United States dollar does, which they're working with MIT on like basic principles for a digital currency. China is leaps and bounds ahead of us in this regard. The digital yuan is reportedly being piloted in a number of regions in China, which we've talked about a lot on this channel. Beijing, Tianjin, Hebei, I believe Shenzhen as well, in the greater Hong Kong area. That's definitely the hotbed because there's a lot of different competing like markets and currencies going on there, so it's an interesting place to do it. Throw it in the fire. In late August, Reuters reported that the People's Bank of China is planning to use the digital currency at the 2022 Winter Olympic Games. That is going to be a very interesting thing. They're going to be seeing a lot of people coming into the country for this, so that's actually the perfect time to unveil it. People can see it. If it works well, they might download whatever apps and things they need to use it. And then one, they keep it so China can collect some data. And two, it'll help make that currency more welcome worldwide because more and more people will have interacted with it. So all in all, good plan for them. China is continuing to do the right thing in terms of cryptocurrency and blockchain adoption. So the rest of the world needs to get its butt in gear. But hey, Apple, which for those of you who don't follow the gaming industry, was currently in a spat with Fortnite developer Epic because Epic made it possible to buy their V-Bucks, so just like their in-game currency, straight from their store instead of exclusively going through the Apple network. And Apple like locked Fortnite out of Apple and was threatening to take out the Unreal Engine, which Epic has developed. So if you take out support for that, that actually hurts a lot of different games that are on the App Store. So it's been this whole thing, and now they're getting into it with Coinbase. So Brian Armstrong, the CEO of the U.S. Coinbase, he alleges that Apple is stifling innovation in crypto and sidelining DeFi to protect itself from competition, kind of like a monopoly. So the CEO alleged that other cryptocurrency firms are reluctant to speak out on these topics for fear of retaliation, like a monopoly, but that he feels the need to speak out as Coinbase has exhausted regular channels for dialogue and has reached a dead end. According to him, Apple's told Coinbase it is prohibited from adding two specific functions to its iOS apps: the ability to earn money using crypto and access to decentralized finance applications. The first restriction, which affects the exchange's Coinbase Earn product, yes it does, has reportedly led to Coinbase having to modify its app in a way that is significantly less user-friendly. He claimed that these restrictions are specific to cryptocurrency users, stating that, why would Apple want to prevent people from earning money during a recession? Ooh, attacking the money. Good move. They seem to not be okay with it if it uses cryptocurrency. In addition, Apple reportedly bars Coinbase from providing app users with a list of decentralized applications or DeFi apps, both of which are, quote, really just websites. Apple's justification for this, that there has apparently been that the Coinbase app, offers cryptocurrency transactions in non-embedded software within the app, which is not appropriate in the App Store. They don't like it because then that lets people go outside the App Store to spend their money, and Apple doesn't get their cut, and they want their cut. Kind of like a monopoly. So while these restrictions are ostensibly designed to protect customers, it increasingly looks like they're also protecting Apple from competition. Ding! That's where it is. And during the coronavirus crisis, when underbanked and unbanked populations may face even greater difficulties in accessing traditional financial services, Armstrong accused Apple of placing yet another barrier to financial inclusion. I don't think it's personally that big of a barrier, but I do agree with his main point and his main thrust. Apple is behaving kind of like a monopoly. But this is America. We're capitalists. So, yeah, continuing on. So, last article of the day. Got to talk about DeFi Protocol BZX got hacked again. Again. And this is why you need to be very careful where you put your money and don't invest more than you're willing to lose. So, this time the hackers drained a little more than over 8 million worth of cryptocurrencies. 8 freaking million. They got away with 220,000 Link, 4,500 Ethereum, 1.7 million USDT, 1.4 million USDC, and 667,000 DAI. I estimated all those. Got it close. But I really didn't think you wanted to listen to me say 2,119, 199.66 Link, whatever. But BZX team member Anton Bukov shared on a thread in Twitter he admitted to the faulty line of code in the smart contract that led to hackers initiating a series of iToken duplicating transactions to steal Ethereum. Yeesh. They realized the initial source code works incorrectly when the from equals the to. Gotta love it. So attackers invoked a transfer function with the same from and to address of the original function. They immediately called a internal transfer form function within the same set of arguments, making the below lines of code faulty. Not going to get into that. They did patch the faulty code after the theft, but to prevent anyone from artificially inflating their balances. So basically, they were just transferring coins to themselves, and it made the balance go up and up and up. It's quite a steal, quite a score. There's someone or a team of people out there who now just have to figure out how to launder their ill-gotten gains. Insanity. It seems this year is not turning out to be a good one for BZX, as Crypto Potato reported. Early in the month of February, a hacker dealt 2 consecutive blows and stole combined $1 million worth of Ethereum. First was on the 14th of February when he used different methods. Valentine's Day. In the first one, he or she borrowed 10,000 Ethereum from DYDX. Out of the 10,000 Ethereum, 5,500 was used to collateralize a loan for 112 wrapped Bitcoin on Compound. And then he sent 1,300 Ethereum and opened a 5x leveraged Ethereum Bitcoin short position on BZX's Fulcrum trading platform, while also borrowing 5,637 Ethereum through Kybers. She swapped this amount for 51 wrapped Bitcoin, causing a serious slippage. And then by swapping that wrapped Bitcoin from Compound to 6,671 Ethereum, the hacker made off with a profit of 1,193 Ethereum, amounting to around 318,000. And the second one took place on February the 18th, when the attacker leveraged Oracle manipulation to game the system and drain around $600,000. So again, faulty code in these brand new rushed protocols. You gotta be really careful with where you put your money. Definitely do your research heavily into the DeFi space. Compare Compound and Aave and BZX and Synthetics. See their hack. What's the history of the hacks? How bad have the hacks been? How long have they been around? How engaged is their team with their updates? Are they putting up protocol updates like daily, weekly, monthly, quarterly? and things like that. Really look into that before you get into the space. That's all I can really say. High risk, high reward. That's all it's going to be. But that'll do it for the trending articles in the crypto news space. Like I said, that was a pretty interesting slate we had today. As always, thanks to all those who have subscribed, and you can check out that link or links down in the description so you can get into the articles themselves. As for the top 10 coins by market cap, not a lot of craziness going on other than the aforementioned Binance coin at number 5 and Polkadot at number 6, both up 3 and 2% respectively in the past 24 hours. Everything else is pretty flat, other than Chainlink being down 5%. Not too much to report. I did, however, quite like in the past 24 hours, Hyperion has increased 51.43%. I don't know what this coin does, but dang, that's a lot. So that will do it for today. Again, my name is John Bryn. This is Crypto Top 10, and I will talk to you guys all tomorrow. Peace out, Girl Scouts.